Moneyality. Moneyality. With the moneyologist, Miss Tanya Collins.
2, 1, 0.
Money.
Hi, everyone. This is Tanya Collins, the Miss Moneyologist, and welcome to Moneyality. Tonight, we are doing a live because I'm so excited. We're around the holiday season. I see people out shopping. It's been crowded in the stores. And I'm always thinking, wow, what are these people's moneyality types? Are they splurgers? Are these people out here? Some of them are keepers. Are they trackers? Are they adventurers? Are they minglers? And just to kind of give you a real quick cap of, if you're a splurger, you're out there. You're probably still hunting for some great deals that you want to do. And I am going to recommend splurgers. I hope that you put a budget aside, that you are focused on keeping your circulating of your dollars and your money within that realm of that budget. And as a keeper myself, as I always tell you, a splurger is someone who loves to circulate their money. They buy presents for themselves, they buy presents for others. They are really festive. I'm sure they are totally enjoying this holiday season. They're not really concerned about inflation. They are just really wanting to be pleasant and have someone to cherish and share their blessings and the event of the season with. So, you know what, splurgers, I am not mad at you. I hope you are definitely still, though, within the realm of the budget. From the previous shows that I've talked about, I tell you, hey, stay within a budget. You know, you don't have to have instant gratification. Did you even do a checklist of all the people that you were going to buy presents for? That was one of the recommendations from previous shows. So I hope you're in that. And as a keeper, I'm out there, but I am still looking for great bargain gifts. And I talked about it in the show in the past. Like, am I really getting a good gift when it's Cyber Monday or when it was Black Friday? But as I've been out there, I am really kind of focusing on my list. I am trying to narrow it down and see the important things that I want to purchase for somebody, and not getting everybody the things that I want them to have, but things that they want that will really be useful for them. So that's where I am as a keeper. And I haven't really been out there in the stores a whole lot, but I kind of am a last minute shopper too. So that's that adventure part of me where I'm on the thrill of trying to get it done right at the end. And then as an adventurer, you're that thrill seeker. You're looking for the risk of that last minute gift that you're trying to get. So I'm always kind of torn between keeping my budget, but also allowing that thrill of the excitement of the last minute part to give me that rush and the enjoyment of having the holiday spirit. So I'm kind of still in the middle of that, and we still got several days out. So it's like December the 12th, and I'm still kind of like, wow, I'm out here. I'm not really sure where I'm headed. And then you have the trackers. The trackers already probably have made their list and they have checked it twice. They have gotten their gifts. They have made sure they have stayed within the realm of their budgets. Trackers probably have been doing their gifts purchasing since the beginning of last year of January. So they got great deals, and they are really always someone who is planning for the future. So they already had their money set aside. And then, you know, sometimes as a tracker, they have to have that push to make sure that they can get a good deal on that item, and they don't want to feel like they have how would you say it? They don't want to feel like they have buyer's remorse when they purchase something. So they kind of want to wait on the sales, but they also want to try to get it while it's there, because if it's not there and they let it slip away, then that's kind of brings some kind of sadness to them, I would say. Like if you are looking for an Xbox and they come out, trackers want to get that when they have the money and it's available, and get it done right then versus waiting and trying to make sure that it's going to go on sale. And then you got the minglers. The minglers are out right now. They are doing their charitable gifts. And I was talking to someone this weekend, and she was very interested in helping people that are homeless or trying to get places to live. And we talked about how rent has gotten up so high and people are struggling with trying to pay rent and things like that, and how is it affecting their holiday spending. And as we say, we don't spend money. So if you're out there spending, then you are going to have probably an anxiousness about you. But when you think about it from circulating, if you're circulating your money, you're going to be thinking about that it's going to come back to us. And yeah, we're going through inflation now. Prices are high in a lot of different areas. But if you stay focused, stay consistent, and putting something back, then it's okay to be able to circulate and enjoy the holiday. Sometimes I think we get caught up in the spirit of it more than we think we can afford. But you know what? There's always somewhere that you can find some idea that you can do at home. I talk about making gifts all the time, being crafty, writing people letters, or making a card or something. There are just a host of other ways that we do not explore when it comes to gift giving. And sometimes it's simpler things, making someone a pie, making someone a cake, doing something that you're really good at, and gifting that can do a world of amazing feelings and emotions for somebody to receive it. Because for me, I really horn in on the personal aspects of receiving gifts that someone has really been thoughtful, or they've done something special for me. They wrote me a note or something like that. And I always say, especially with children, because I focus on Moneyality with children, teach your children how to be creative and allow them to have some of that mingler mentality around the holidays, where they are out and I know one thing that I always loved, and I'm not sure which one of my friends told me this, but she mentioned that her parents would make them give their old toys away and donate them to different charitable organizations around the holidays, and then they could get replenished with new gifts that year. And I thought, wow, that's really nice. Instead of just continuously collecting gifts and children just having an abundance of things that they're not even using, I thought, wow, that was really nice. And it kind of gets children in the mindset that it's okay to be charitable, that there are people that possibly are less fortunate. And so you are teaching them at an early age to be able to share and to enjoy the moment and to be a blessing to someone else, as they often are being blessed by you as their parents. So that is one way that minglers probably are really horning in right now, really doing a lot of collecting gifts, taking them to charitable organizations. You got the Santa Clauses, you got the people at the stores with Salvation Army. So there's just a wealth of different ways that we can be given to these organizations. So I will say a mingler probably really loves this holiday. And that has been pretty much what I have been thinking about. This week, I've had pretty much a relaxed week. I haven't really had any moneyality moments that have been overwhelming me, other than the fact that I am going to start making a quick list of some things that I still need to purchase, and then getting those and trying to actually do it ahead of time and not being the thrill seeker and waiting to the last minute. So that's my goal. That's my gift to myself, is to be proactive this year and to be very strategic in what I'm purchasing, and also being mindful of it being something that can be useful and appreciated by the receiver as I give them their gifts. So that's where I am tonight. I am excited though, because I'm also wanting to talk about tonight is the key factors of insurance money and you. I have so much respect for insurance. I have had issues where when I bring Kevin on with State Farm, he's going to be coming on, but I've had so many issues that we're going to talk about because of my mentality as a keeper. I am always trying to think I want the best deal for my insurance at the lowest price. But as I'm going to learn, and you're going to hear from him, that sometimes you just got to make sure you got the coverage that you need that makes you have the least resistance to coming out of pocket when if something were to happen. So I've had to kind of recycle my thinking on that and realize that I am going to make sure that I can put myself in a position that I am always covered and that it doesn't hinder my financial growth, and that I'm always going to be able to have something to support myself through um, keeping my own finances, investing in insurance that keeps me in a safe place. So we're going to bring him on. But before we do that, we're going to talk about my sponsors. So my first sponsor is Joy Media Group. Joy Media Group is at www.joymediagroup.net, and the number is 901-618-9501. And I always want to just thank Joy for her wonderful assistance with being the producer of my podcast. And the next sponsor is Nick Venti Design, the one-stop shop for mobile apps, animation, and web design. And that number is 662-902-9737. And I am very excited to say that my website is going to be up and running in the next few weeks. So I'm excited about that. It's going to be really refreshing to see the work that we have been doing to be put out there on the website. We're going to actually have the Moneyality assessment for 18 years old and above that you can come online and take. And we're going to have it in a way that we're wanting you to give a quick donation to take the assessment, because we're using that funding to build out the program, but also to be able to provide it to children that may or may not be in areas that can be subsidized. So we can subsidize them to be able to take the course that is called Moneyality, Activate Your Mind and Circulate Your Money. And that course is still in the process of being geared up and added to the website, but Nick does a great job. And so I love the fact that I have such a great team of people around me supporting my mission. So with that being said, we're going to now bring on our guest tonight, Kevin White with State Farm Insurance out of Memphis, Tennessee. Hi, Kevin.
Hey, Tanya, how are you?
I am good. How are you? Happy holidays.
Well, happy holidays to you as well. Doing well.
Kevin, great. You know what? I know you have taken the assessment and we're going to go over your scores. And before we do that, though, well, no, let's bring up the scores. Let's see his scores and see that he is a tracker. He has 8 points, and there are 20 questions on the assessment. So the total score has to equal up to 20. So he's a tracker, which is his highest score was an 8. He's a splurger, which is the highest. Next is a 5. So his primary is tracker, his secondary is splurger. Then he's a mingler. He's got 4 points in that, a keeper 2, and an adventurer 1. And Kevin, you've heard me kind of do a quick summary of each one of those Moneyality types. And tracker is someone who is a great planner. And before I even let you speak, I'm going to tell you that when I think about insurance and I think about businesses and I think about the people that are in the top 5% of people that have wealth and business entrepreneurs, I often wonder, what is their Moneyality type? And now I've had several on my podcast before, and out of the ones that's on my podcast, their number one or their primary or secondary moneyality type is either a tracker or a keeper. So you are an entrepreneur, you have a business, and you are ranked in the top with the ones in the past as a tracker. So I'm continuously doing the research on that. But what do you think about yourself as a tracker?
Um, I believe I believe looking at the characteristics of a tracker here, I believe, and I can't tell you what questions qualify me for that, but I believe that, for the most part, that is more of my leaning. You know what I mean? That's more of my leaning. Uh, I guess that's more my foundation to some degree. So you kind of don't veer too far, but I have opened up a little bit because my secondary was a splurger. So with that being said, I guess I've learned to be a tracker, but at the same time, be a little flexible when it comes to some of those things or what have you.
Tell us a couple of the things that's on the list for a tracker that you think you resonate with.
Um, I think to some degree, I'm okay with delayed gratification to some degree. Um, Being able to kind of wait. And I heard you speaking in regards to shopping. And when I was doing the questions, I was kind of, when I go out, I'm not very impulsive when it comes out, to that. I'm able to, if it doesn't speak to me, I kind of can say, all right, I'm good. It's not connecting with me. So I'm able to do that a little bit. And um another one would be plans, prepares, and prioritize. I kind of can, and sometimes even that might take place in my mind, but I know, I guess, over the years and through experience, I can plan, I can prepare for it, and then I can prioritize its place or its the urgency behind it or the lack thereof. So those are a couple that I resonate with. Um, and I'm somewhat of a researcher too. I'm somewhat of a researcher when it comes down to taking a look at it, and especially if it's in my, heart, then I'll really start, taking a look, trying to get a little more knowledge about a certain thing. Um, if I'm, especially if I'm looking forward to, spending uh, to some degree. So those three resonate with me. I believe those are the top three.
Okay, so Kevin, you
Hmm.
are also your secondary one is a splurger, which is also the opposite
That's right.
of the instant gratification, because you, as a splurger, most splurgers like the instant gratification. It's hard for them to not to resist having the instant gratification. So I say that in a way that's kind of funny, because I am a keeper and an adventurer, which are somewhat opposites, but they are really a quick battle between it. So I'm laughing because as a tracker, let's talk about the holidays. Have you done all of your shopping for the holidays?
No, I haven't done any. I'm like you. I like the adventure of uh kind of like the last minute. But what I do is, because I think when it comes to giving gifts, and I think you were mentioning that a little bit earlier, I try to think of the person. I like to put thought into the gifts that I purchase. It's become very convenient now to get gift cards and things like that. But when it comes down to Christmas or me giving a gift to someone, I really want to think about that person. I want to think about what they like, and I want to even imagine what them receiving that gift, what type of expression or how they might feel once they receive it. I just believe that's important to giving a gift. So I love that aspect. And then I believe that, and it never fails me. I'm always able to go out and I'm able to find that right gift, and I love that little thrill behind that. But I also plan, I guess, and I've seen little memes of men and women and how they shop. a man knows how to go in, or he might not know, but the meme says that he goes, and he gets it, and he's gone. So in my mind, I've already kind of identified. And I'm thinking now. I only got a few more days, but I'm thinking now of these individuals I'm going to buy gifts for and what I want to do. And so I love having it narrowed down to a few stores, and then I'm able to go in and take my time. Even though there's a lot of people there, I'm not rushed, and I find those hidden items that will make them say, "Wow, thank you," whatever. So, a lot of planning goes on in my head, or what have you. So that's just kind of how I do it.
And I think those are very much characteristics of a tracker. And let me expand us talk a little more about a splurger. When I talk about a splurger, those gifts that you see, that you say you plan, you think about, you want it to be significant to those people.
Mhm.
Is there a cap on the cost of those gifts, or is that a factor?
Well, yeah, there is. It depends on who the person is, but for the most part, there is a cap to it, because you said it earlier. You don't want to get caught up in the commercialization of it, especially around this time of the year, and it's easy to do. So I'm never pressured into. I don't care how many ads I see. I can't tell you when the last time I went to a Black Friday or anything like that. That doesn't motivate me at all. So when I go out, I'm thinking about the person. I'm thinking about, and I have a general idea of the cost of a gift that I want to spend. And I think you mentioned it earlier in your when you opened up, having a certain amount you want to spend total. That's always kind of fixed but unfixed. You know what I mean? I know where I want to go. I'm not going to fall out if I go a little bit over it, but I'm always happy when I can accomplish that and I'm under that number that's in my
Hmm.
head or
Hmm.
what have you, because I'm not going to, overdo it, for that or whatever. But for the most part, yeah, there is a cap, and I guess it's a soft cap in my mind that I go for, and I know it'll tell me. I know when it's overboard or whatever. Like I see here for a splurger, buyer's remorse. I rarely have buyer's remorse because I guess of the planning that goes into it. But at the same time, I don't know. It's kind of weird, but I've said this earlier. It kind of speaks to me, the gifts or whatever I purchase. If it doesn't speak to me while I'm holding it, you know what I mean? While I'm walking around,
What is it saying, Kevin? Buy
and
me.
yeah, I mean, it's just weird like that. But I know, and I'll go and I'll be like, man, and then I might put it down, walk around the store, but it's still okay. I got you. But and then there are other times that if it doesn't, and I'll get home now. I said no buyer's remorse, but if I buy it, I was like, I didn't feel that. And I don't know why I bought it. You know what I mean? Because I normally can resonate with a purchase or what have you, and so I won't have to have that buyer's remorse.
Well, I still hear that there is that combination of the tracker, the splurger. Minglers are somewhat into what you're saying too, because as a mingler, you want to build relationships. Minglers are really big about having positive relationships. So the amount of money it may would cost, or those are behind their minds. The splurgers and minglers kind of can go in it together. Minglers don't even really care about money, period. So their biggest thing is, how is that going to make that person feel? How is the relationship going to bond with that? So I hear a big group of all three of those top three that you have: the tracker, the splurge, and the mingler. And what we talked about earlier is, as we mature and as we grow, you start learning that all five of the moneyality types they are within us. And I always tell people, you pull from them in the situation that you need them to be in. And that's when you know there's maturity. That's when you recognize that you have growth in your life. Because if you stay stagnant and you are a tracker and you're constantly planning and you're constantly trying to make a budget and be on a schedule, you can be overwhelmed that you will miss opportunities to just let things flow, like you say, to get the feel of it. And I like that. I like that you have shown from just talking to you that over time, I guess you have decided that you take control over how you manage your finances. And that's something that I even heard today, where I heard this guy say that there were three ways that people think about money. And he talked about when you are poor, you think about paying bills. That's all you want to think about, is you working to pay bills. And then when you are in middle class, he says you think about ways. Darn, I kind of the middle class one. I don't know, have you heard this before? Like in middle class, when you're poor, you're thinking about you just go to work and you're paying bills. So when you're middle class, you're paying bills, but you want to save a little bit more. And then people that have money are always thinking about ways they can let their money make more money for them. And that is the level of where I want us all to be. Not that you have to be with a millionaire bank account, but you can definitely have a millionaire's mindset
Yeah.
where you control how those five moneyality types respond when you are purchasing. Like I told you, at a grocery store, my moneyality mindset is going to be different than in a clothing store, because in a grocery store, I will buy a bargain brand at full price, because those things, I'm not going to wait and try to say, wow, they're going to go on sale. They're going to have a fall special, or the spring is going to make it cheaper. You're not going to do that with a brand name of food. But in a clothing store, you already know Christmas is over. Wow, they finna go into your spring clothes. All that's finna be reduced. So it definitely makes a difference based on the time of year, where you are. Are you in a grocery store? Are you at a car dealership? Are you at a clothing store? So definitely those play a big part of it. And one more question before we move on and just really deep dive into insurance is, tell me, what was your first memory of money? Were you a young child? Tell me, what are your first thoughts of understanding how money works? How old were you?
And let me say this first. I think that last thing you mentioned speaks to delayed gratification, being able to know that a sale is coming, or have the patience to say, all right, I'm not going to spend the day, because I can wait a few more days and I can get that. And if it's not there, I'm okay. That type of thing. But one of my first early experiences with money and how it works probably was when they used to have a store in Memphis called Surplus City. I remember. And I was about maybe 4 years old or so. And I remember wanting this little toy gun. And we get to the register, and I don't know, I had it. I don't know if because Mama wasn't the type of mother that you could touch stuff. So apparently she she was thinking about me getting it, or something. So when we get to the store, we get to the cash register, she tells me to put it back. And oh man, I'm just having a duck fit, because I'm trying to figure out why we can't get this, And Mama was just, explaining to me that we don't have the money to get that right now. But we had some other stuff, we couldn't get that. And at a young age, I started to realize, wait a minute, there's this. So this money can buy this, and we don't have enough of it, for me to get this. What is going on? What's really going on? Mama straightened me out, but my whole point was, I learned then, man, there's something with this money thing, because as a kid, this time of the year, or maybe October of the year, we had no concept of money. We just had a concept of having a request, and we get those service merchandise catalogs, Sears catalogs, JCP, and we're circling everything we want, and we had no concern about, we didn't know anything about a budget and all of that kind of stuff. We just knew this is what we want, and we knew who to ask for it, and so I wasn't really making a connection as much. But that was one of my first recollections of, wait a minute, I can't get what I want. What is going on? Why are you saying no? You know what I mean? And it was because we didn't have the money for that, at that particular time. So that was one of my earliest recollections of money and understanding what it meant, because it kind of collided with my desire at that time. I couldn't get it, whatever, what I
Was
want.
it your desire that you thought that you should start saving for it yourself? Or you just okay with maybe where I'm never gonna get it?
That learning to save for myself didn't come until much later. I didn't get that until, I would say, I was around fifth grade, maybe fourth or fifth grade, and my mom began to teach us to learn to buy gifts for others, right? So she would give us money, like they would have a little Santa workshop or something at the school where you could go and purchase gifts. And then, so she would give us money then to go and buy gifts for each other and for her, and we bring them home and we wrap them and all that kind of stuff. So she was teaching us at an early age, okay, now take this money and begin to buy other people gifts. And then at some point that continued on, the gift giving aspect, not just receiving only, but for the longest, it was all about receiving. Because I up until then, I don't ever remember giving mama anything other than what we made at school, those little something
Those
at
little
school.
gifts, yeah.
But at some point, she began to give us some money and then teach us to use that money to buy somebody else something with, to buy her something with or whatever. And so now it's like I often tell her, it's like her birthday or Christmas, whatever. I was like, Mama, I don't know what to get you now because I've been buying you gifts for 50 years, And she's like, well, they still got something in the store. They
Yes,
still
they
got
do.
something,
Yes,
they
they
still
do.
got something. I don't want to hear that.
You just
And
have
don't
to
give
be
me nothing for the
attentive.
house. And don't get me nothing for the house. So I get it.
I get it. You know what? I love that story because I like the idea that your mom did share with you to start being a gift giver. And
Right.
that is important. That's kind of like the same thing that I was talking about earlier. We instill in our children the values of financial literacy, but sometimes it's a, I don't like the taboo part where we say, oh, uh that, don't worry about that, that's grown folks business or whatever. But you have to start introducing them, because based on how I know the research has affected my life with Moneyality, children already have a sense of understanding how they feel about money, but they don't really know that it's money, but how they feel about gifts or sharing. And a lot of that is values that are seen through their Moneyality types. So I'm glad your mom did that. And kudos to her for that. And yes, continue to shop for her, continue to plan out those gifts and make it where she is having an enjoyable time opening them, because I'm telling you, my mom has been a big influence on how I am today, and she didn't even recognize that she had been until I started telling her how my Moneyality types work. So thank you for sharing that. And now we're going to deep dive into insurance, Kevin. As I had mentioned before, I have been with you since 2015, I think. It's been a while. And it was me always figuring out, I want to find the best deals, especially having a home. I always want to do the grouping because they say if you group it all together, you get a better discount. So I got my home, my car, anything that I could get. I've been coming to Kevin White with State Farm. So with that being said, let's talk about what are some changes we're going to be seeing in the new year with inflation, or like with car insurance. One thing that I know people struggle with is credit scores being a big factor in getting car insurance. So if you could tell us a little bit about that, or just kind of tell us, how did that get started?
Well, I would say this: the moneyality piece, or the teaching that you do in regards to our finances from the beginning all the way to where we want to go with it, is very important to even purchasing, or to purchases such as insurance, because credit insurance companies base everything off of risk. They base everything off of uh, patterns, and like you said, you've been doing research. So insurance is an exact science as it regards to its mathematics. They take probability. They look at the population. They zero in on zip codes. They look at stats, and from that they determine what type of rate. They look at the year, make, model of a vehicle. They look at the type of incidents that take place. They look at how many people have that type of vehicle. They look at the probability of an accident because you got so many of those. And then what they do, they take in consideration the cost of the parts and things of that nature, where they have to get the parts from. And from there, they set rates. So credit is important. Driving history is important, but a lot of people don't know that. So they just assume that, man, I should be able to get a good rate. I haven't had any accidents. I haven't had any tickets. Yeah, but apparently your credit might not be the best, because they believe, based on their stats, that the people with not so good credit, they don't make the best decisions. Now, you don't have to stay that way, because I've been through periods of having great credit, bad credit, great credit, and so forth and so on, because I made decisions, right? Some of them were well warranted, some of them were not. And I had to pay for that. Well, you pay for it in more ways than one, because you're going to pay more for your homeowner's insurance. You're going to pay more for your renter's insurance. You're going to pay more for your auto insurance. Even when it comes down to life insurance, if your driver's license is suspended, you can still get life insurance. However, if it's suspended and you still been getting tickets while it's been suspended, they won't they won't sell you life insurance, because what are you proving? You're showing I make bad decisions. And if I make bad decisions, you might make a decision that could cost you your life, and then now we got to pay out on this. So it's all a business.
Wow.
You know what I mean?
Wow.
So moneyality is very important to keeping your cash, keeping your money. You want to get a deal. If you got good credit, a good driving record, you're already getting a good deal, right? You're going to get a better deal than the person who has, some blemishes on their record and bad credit, you know? So even with the same year, make, model car or what have you. So those are the types of things. Insurance, basically, and I mentioned this to you earlier, a lot of people don't see insurance as a financial tool. It is. They move past insurance and go straight to having a financial planner, right? Well, the first financial planner you should have is a good insurance agent. Someone who can sit down with you, learn a little bit about you. Who are you? What are some of your dreams and some of the things that you want to do with your finances? What are some of your financial goals? Because what insurance does, it protects those goals. It protects the money that you want to use for those goals. And I mentioned this to you earlier. Everybody has insurance, whether they have a insurance provider that they buy it from or not. Why? What does insurance do? It doesn't protect your car, doesn't protect your house, it protects your income, it protects your savings account, it protects your finances that you have put away for future use. Because if you have an automobile accident and you are not partnered with an insurance company, all that means is if you're at fault, you're going to pay for it out of your pocket. Okay. Whether that means your checks are garnished or what, you're going to pay for it. And you notice people driving around with a fairly decent car, but it's just wrecked and it never gets repaired. They chose to be a self-insurer. They chose to insure it themselves, and they may have run a little short on the money. And they say, well, this car is fine to drive as it is, But when you partner with an insurance company, you're agreeing to pay set premiums so that when something does happen, you won't pay nothing outside of what you've agreed to pay, which is your deductible or what have you. But now the key is you want to have enough. So if I'm working with you, Tanya, and one question I might want to ask you, and it might not even be on the application, but I might need to know, Tanya, what's your household income? Is it 0 to 25 a year? Is it 26 to 50? Is it 51 to 75? Or is it 100 above? Why is that important? Because now I know what category. Where are you financially? And that helps me to set a number, or at least inform you of the type of liability insurance you need to have in place to protect those assets. I see a lot of people who have nice cars, Mercedes Benz, and they have a lot of assets that they want to get insured. When I look at their limits on their auto insurance, for the most part, they'll have the state limits. 25,000, 50,000 for bodily injury max. I'm going, wow. But you make over 100,000 a year. So if you are at fault in the accident, you're saying, insurance company, all I want you to pay out is $50,000 max for their bodily injury. I'll pay the rest. I'll pay the rest. And most people don't consider that. They don't consider, because if you take your money and pay the rest, then what happens to your dream? You will quickly become a tracker. At that, you no longer be an adventurer. You're going to become a keeper, right? Your splurging is going to
Yes,
be limited.
I
I'm just
love
saying.
that.
Yep.
Let me interrupt you on that, Kevin. So let me make sure that people are understanding what you're saying, because it makes perfect sense to me. I now drive a car that is paid for. I've had my car for a while now. It's paid for. So when I did come to you, I was like, Kevin, should I be trying to have full coverage on this car? Because the value of the car is low, probably, for sure. But does it cover me? Like, am I going to be covered with bodily harm? And if I am getting, just what is it called, what do I have,
Like liability or
liability. I just have liability on that car, because I'm like, oh, I can buy me another car. But as I'm hearing you talk, it totally makes sense. And it makes me think, like, wow, when I had money, I was like, and I had a really nice car. I probably did exactly what you say, because I am a keeper. I was trying to stay in the means of saving my money. But when you put it that way, if I had an accident and total somebody's car out, and their car was valued more, and my car, I have had to deal with, what is it called when your car is not fully insured? It's, um what is it, the other insurance, gap insurance. I've
Yeah.
had to have that gap, because I was in an accident, and I didn't have enough coverage, and so I ended up taking a big loss.
Yeah.
And so then I said, oh, I'm going to get this gap insurance. But in actuality, I could have just increased my limits on my regular insurance and covered that. Is that correct?
Well, it depends on the value of your car when it comes to it being totaled out or what have
Mhm.
you. So gap insurance fits that gap. So whenever you buy a car, purchase a car, leave the lot, it's going to go down in value, right? So what you owe on it, in most cases, is going to be a lot more, maybe not a lot more, but it's going to be more than what it's worth. So if that car is totaled out, an insurance company will determine it costs more to repair this than we want to pay. So we'll offer you X amount, right? It's going to be a little less than what you owe. So that gap insurance fits perfectly. It will fill the gap. You buy that from the dealer or whatever the case may be. Now, what you're really concerned about is if you're at fault in an accident. So now, if you have estate limits, liability is fine, because the older you those are decisions you have to make, and good decisions. You have an older car that's paid for. At some point, you're going to start looking at, well, how much would they give me if this car is totaled out or whatever the case may be? They won't give me much. I don't want to pay that much for it. I'll have money set aside to buy a new one if I'm at fault in an accident. So the main thing you want to do is start looking at the levels that you have. Okay, because if you're at fault and the other people suffer bodily injury, they get that phone call as soon as they have an accident from the accident chasers, or I'm sorry, the personal injury lawyers. After they call 911, they're gonna call 411, and then they're gonna sue. So what you want to do is you want to bump that up high enough to protect your assets. Now, a lot of people don't know this. We're so money conscious. We're such a keeper and a tracker that what we don't know is the difference between the lowest level and sometimes two levels above in coverage might be $10 a month, right?
Wow.
It might be $12 a month. I mean, okay, that's a breakfast. You know what I mean? That might be a lunch, maybe. And
Right?
so with that being said, that difference you're paying for is worth it. it's worth it, as opposed to having to
Yes.
be worried. And worried came up a lot in the questions when I was doing the questionnaire here. I mean, I'm worried about this. People actually worry about those things when it happens. Now, no one's worried when you don't have an accident. And so some people like to take that gamble, or so when you talk about homeowners, you might live a long time and never have an incident, and that because nobody wants to have an accident or that type of situation. But what you want to have, if something happens, you want to have the type of coverage that you need. So be willing to pay for some costs are necessary,
Right.
for you to have. Now, out of all the insurance that I actually offer, life insurance is the only one that we all will have a guarantee of having to use. You know what I mean? You might have that car policy or the homeowner's policy for years, never had to use it. And people be like, man, I never filed a claim. But if we all live long enough, we're going to need to file a claim. Somebody's going to file a claim for that life insurance piece. And that's the part that I'm finding, because there is no mandate, because there is no law that says you got to have life insurance, like the auto insurance piece. Or if you're buying a home, the mortgage company makes you have, or sometimes if you're renting an apartment, your landlord makes you have renter's insurance. No one is making you have life insurance. That's a personal choice. And what I find is a lot of people skip on that, right? And they're busy saving, and not realizing that having a life insurance policy in place can accelerate that saving for them. You know what I mean? So one life insurance policy could pay out more than years worth of savings could for you, for your family and your beneficiaries. So that's just
I
something.
need to talk about that, and I think you are so enlightening right now. I'm going to have to bring you on again, but let's talk about that real quick, because I'm that person. I am a single Black woman, no children, have done very well in investing my money, have been very responsible as far as having my insurance for my home, my cars, my rental properties, all those things, Kevin. I've done that. I have not gotten life insurance because my mindset is I don't know if I'm wanting to leave something for somebody. And I
Right.
think I got enough money saved that they can bury me. So, do I want life insurance? And I'm still in that struggle. So, help me make sense of that. Like, does that should I really be reconsidering that?
Well, I would say to you, in most instances, with what you just described, you really, didn't mention anyone that you might want to leave as a beneficiary, what have you. But you do have an organization that you've started, right? And
Mhm,
your organization is one that you really are passionate about, and
mhm.
you're seeking sponsorship and things of that nature. Think about, you don't want this vision to leave with you, right? Because it's bigger than you. So
Right?
if you think in terms of someone that might take the mantle years from now, that you have groomed up, and they are poised to keep this vision going forward, wouldn't it be amazing if they got a big boost when that time came from its founder to say, hey, keep this, and I want to put this in some type of trust, and from the interest that is gained from this, then this could keep it going, along with all your other sponsorships, of course,
Mhm.
but you'll still be fueling that. I think that might be one area that you might want to consider,
I
leaving the beneficiary.
I love that. And that is, I've heard about endowments and stuff that a lot of universities get from people leaving their money to the universities and stuff like that. So thank you for that, because we are going to talk about that then. That is my next conversation with you, because that is important. Now that you think about that, I do. And do you handle trust like that?
I don't. And if I'm looking for someone that I can trust, who I can place my customers into their hands, who will help them. Because when I write a life insurance policy with someone to ensure the future of their family, then putting it in a trust, making a trusted beneficiary will be amazing for
Mhm.
them, right? And so I'm looking for someone who I can partner with, who I can get them all the way to a point, and then say, boom, here, and they can show them how to put their 401ks. They can show them how to put their Roth IRAs. They can show them how to put their cash value life insurance. They can show them how to put their real estate and all of that in that trust. So now we're talking about building wealth. You know, we're
Yes.
talking about generational wealth. Now, I don't possess that knowledge. I've just heard of it, but I need someone who can take it from there. And then we got a whole team. So you're teaching them finance. I have a little piece, and then someone else, and then boom. Now we're talking about not depending on, the government per se, to do ABC. Or they may or may not. And we can be in the know of whatever works for us. But if they don't, then we have the knowledge, the know-how, the financial know-how to make it better for the next generation and teach it to them so they won't be gone like that. You know what I mean?
I've heard all kinds of stories about family members that have had businesses, and when that family member died, I've heard a story where this one family member owned this company and had his family members working for him, and when he passed away, that whole business started to die because there was no money put in place, like you're saying. So you and I both will be looking for someone that can handle those trusts, because I am going to speak with you about the insurance, the life insurance, because there are nieces and nephews that I would love to leave something, but I also want it to be in a way that I can specify how they get it, when they get it, and things like that. So that's going to be important to me going forward for
Yeah,
sure.
that's a good way to look at it. And as we come into that type of knowledge, and as like the knowledge you're sharing, then we can share it, and it helps us all collectively to do better. You know what I mean? Because we're getting it. Some people are getting it kind of late. You were blessed with a good foundation to be able to be money conscious at a young age, and you're doing well. A lot of us did not, but it's not too late. It's not too late for us to start where we are, and take it from there.
I agree. And so we talked about one more thing since we're talking about business. I mentioned to you about getting coverage for businesses. And I know that as a woman that has an online business that is geared toward children, at one time I knew when I was going to be working with them in person, I was going to have coverage, because you want to make sure you protect yourself when you're dealing with someone's child, and making sure that everything is at a place where you want to protect them from themselves or any accidents or anything like that. But going forward, since I've moved my business to online, what are some recommendations you would say for me to be insured with my business?
Well, I definitely think that having a liability piece in place, just a general liability piece in place, is still important. Even though you're not, dealing with them per se, in person, it's still anything could arise that you could possibly be liable for. Uh,
Mm-hmm.
they could say that, hey, she slandered me, or she libeled me, right? You put something in writing, or you said something and they felt some kind of way about it. Well, you want to protect yourself against that. And then there may even be some type of, and we'd have to search a little bit for, but there may be some type of professional type of, I guess, errors and omissions type. You might partner with someone at some point who want to use your program or what have you, and you promise to be able to do A, B, C, or D. And someone might say, well, we didn't get that benefit. You know what I mean? She failed on her professional knowledge side of it. And you might have to protect yourself against that type of, accusation or that type of charge. Like me, for example, I have errors and omission because I might make an error or I might omit, and that it could come up, in the company. I'm on my own. They're gonna be like, hey, you make sure you got this insurance or you have that
Right.
coverage, you know. And so that might be a tandem of type of insurance you may want. Now, if you're going to be dealing with personal information, I don't know how far and to what extent you might go. You might want to think in terms of having some coverage in the event there's some type of data breach.
Right.
Someone gets into your system and has access to everybody's information, or it could be a situation where someone impersonates you and steals your identity,
Okay.
and they're out there talking to somebody's child and it's not you, right? And now there's a real problem where you might have to recover your identity. They might go out and, and start a separate account and take people's payments, and you have no knowledge of it. And
Wow. Yeah.
you find out about it, whoa, your identity has been, compromised. So you can have some type of endorsement there that could provide you with some type of recourse to recover your identity and take care of that situation for you. So it's just a lot of little things. You might not need everything, being that you're no longer in person, but some things just lend themselves all the way around to just having a good package in place. And some stuff comes with the package. You don't have to pay extra for it.
Well, Kevin, we're
Mhm.
going to be wrapping up, but I want you to research all of what you just said because Moneyality is here to stay. And I want to be covered to the max because that's what I represent. I want to represent branding where my information is solid and I got good advisors like you on my team that are able to give me positive feedback and give me directions on where I'm going. I want anyone to know that I love having advisors. I love having people to give me insight because that's how I have grown. This stuff that I have researched and looked at has been part of who I am, but it's also been a part of just having great people on my team, great partnerships with you as my insurance person, and just having relationships with teachers and all these people. So going forward, I want Moneyality to be covered. I want us to be able to have a meeting, if not by the end of this year, but definitely by the first of the year prior to launching to get all of this covered, Kevin, because as you and I know, this has been a dream of mine since years. And for you and I to be having this conversation, to see that it's coming into fruition, I am very proud because I remember having conversations with you early on about my dream, and it
Yes.
has been a dream deferred, then come back. But now I'm ready.
Mm, that's
I
good.
feel the energy of it, and I really love where I'm headed, and I love the support that I have. So, are there any closing things you would like to say?
Well, I definitely thank you for having me. I do recall us having early conversations in regards to your vision, and I think that your vision is a very needed one, a very timely one. This type of education, normalizing things that are normally not normalized in every circle, bringing this type of knowledge to everybody is very important, and I'm grateful for that. I think normalizing some of the stuff that we talked about today, getting people to stop thinking um, negatively about things that they need so important, as opposed to, I mean, because we're big spenders. I mean, all the stats say we got the money, that's why we're
Yep.
catered to. So if we can begin to impact the mentality and the mindset of people, then we'll begin to see growth in the areas that we're looking for. And we won't necessarily always be looking for a savior as in regards to somebody come help us, and we'll all collectively begin to provide the solutions that are given and that are available, and we're able to help one another. So I'm thankful. I appreciate you for having me, and I'm always available.
All right. Well, this has been an amazing podcast today. I hope everybody have heard some key factors about the insurance and about money and how it totally can affect you. And going forward for the rest of the year and then 2020 and 2023, which is fast approaching, Kevin, I will continue to share your name with family and friends, with people to say, hey, Kevin White with State Farms has been awesome for me, and I value your input. And I want to just wish you a happy holiday. I want everybody to know that Moneyality types are real in our lives, and our focus should be definitely starting with the youth early and getting them to have an understanding of their financial future, to start building healthy lifestyles around money, but just in general, having a healthy mindset about living life positively and without the stressors of how negative things are going to happen, but just how to have strategies in handling those things. So we're going to close tonight. Thank you again, Kevin. And we will be talking again. And I look forward to being on Moneyality with Tanya Collins. Y'all have an amazing evening.
Moneyality, 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 moneyality with the moneyologist, Miss Tanya Collins.
2, 1, 0.
Money.